The stakes are high as control of DeFi's biggest protocol is on the line. Stablecoins are battling for liquidity with million-dollar bribes for votes, enemies becoming alliances, and the potential for Curve V2 to change how we trade cryptocurrency forever. The story starts at Curve, but dives into how all the pieces fit together as new entrants come into the market. At the end, I'll explain why the native CRV token might not be optimal for an investment portfolio, and how I allocated capital more efficiently to gain exposure to the Curve wars. Good morning, my name is James Piccini, and I create educational content about digital assets, blockchain development, and emerging DeFi technologies. I'm not a financial advisor, this is not financial advice. Curve is a decentralized exchange much like Uniswap, except for it has a different pricing formula which makes it more well suited to stablecoin pairs. If a hedge fund wants to trade $10 million of USDC to USDT, they'd likely use Curve because it's just more price efficient. Curve gets this price efficiency by having vast amounts of capital in its liquidity pools. At the time making this video, there's over $23 billion worth of digital assets locked inside Curve's smart contracts, making it the biggest DeFi protocol by TVL, or total value locked. Now this is where it gets interesting. Curve attracted a lot of that capital through the distribution of its CRV governance token as an incentive for liquidity providers. But how do they decide which pools get which allocation of the CRV governance token? Well, this is decided by the relative weight of the gauge for that liquidity pool, which is in turn decided by votes using a value escrowed Curve token. So a user needs to lock up their Curve for up to 4 years to get a vote on where the new CRV tokens are going to be allocated through the liquidity pools. If we take a look at the current relative weights, we can see that MIM is becoming more and more dominant. This is the stablecoin for Abracadabra. Abracadabra are getting the votes to increase the weightings of Curve being distributed to their liquidity pools. These boosted pools increase the rewards for liquidity providers attracting capital. This benefits stablecoins in a number of ways. It attracts capital and trading volumes to the stablecoin, and it also helps maintain a peg to the US dollar. As more institutional money flows into the space, it's likely that Curve is going to be one of the biggest beneficiaries because they're providing a high-yielding return on a stablecoin pegged to the US dollar, which is very attractive to traditional finance. But it's not just Abracadabra that wants to position themselves for this opportunity. There's a lot of companies all competing for voting power so they can boost Curve rewards on their own liquidity pools. And that is what coined the term the Curve Wars. One player saw how this ecosystem was evolving early, and in May 2021, Convex Finance launched their Curve Boosted Staking Protocol, which offered an incentive for users to permanently lock their Curve tokens on the Convex platform. Convex dominated, and they now have over a 50% market share of the Curve voting power. So it's game over, right? Well, not exactly. It just moved the battleground, and now there's a fight for control over Convex voter power. To understand the Curve Wars, we really need to get to grips with all the different tokens that are coming into play. So let's pause for a moment and go through them. So first of all, we have CRV, the main governance token for Curve. We've already spoken about this. It was used to incentivize liquidity, and it was paid out to liquidity providers based on their relative weightings in the gauge. Next, we have VeCRV, and these are the value escrowed Curve tokens, which you get for locking your Curve for up to 4 years. These aren't completely ERC20 compatible and are non-transferable, so you are essentially locking your tokens or your position in Curve when you do that. Then we have CVXCRV, and this is a token receipt for Curve that's locked into Convex Finance. This is ERC20 compatible, and there's third-party marketplaces, which is just as well, because it's a one-way process. You can't unlock your CVXCRV back to Curve using Convex. Next we have CVX, which is the main governance token for Convex Finance, and this was obviously used as an incentive for users to lock their Curve into Convex Finance. Finally, we have VLCVX, which is value-locked Convex tokens, and these are used for voting within the Convex ecosystem. So if we go into the Convex website, we can see we've got a couple of options here. Let's first take a look at the staking. So here we can convert CRV to CVXCRV in that lock-in process. Then by staking CVXCRV, we're actually getting a 52% APR. Here's a breakdown of how that's derived. The other option is to lock CVX. So if you don't want exposure to Curve through the CVXCRV token, you can gain exposure to Convex's governance token itself. And this is where we can gain exposure to the bribes that are currently taking place. Note that bribes are more transparent and less negatively perceived in the DeFi ecosystem, particularly for CVX holders. The most widely used delegate is a platform called Votium, and these accept and distribute bribes on your behalf. There's currently no funding rounds for us to look at, We can go back and see that the previous funding rounds exceeded $18 million in bribes. And these were distributors to holders of that locked CVX token. Finally, I don't think it'd be complete to talk about the curve wars without mentioning Redacted Cartel. This is a project which is aiming to bring ohm tokenomics to the curve wars. They're essentially trying to attract CRV and CVX voting power using a rebasing smart contract token similar to ohm. If you read the documentation, you can probably see why this is a bit beyond my appetite for risk, but it's definitely one to watch in the future because it could have a big impact on how the curve wars play out. So I can just buy CRV on a centralized exchange and gain exposure to how this all plays out. Well, you can, but don't forget that CRV is a farming token. It's provided to liquidity providers who are going to dump it on exchange. So it might not be the best way to allocate capital for an investment portfolio. For me, I decided that the best risk to reward was to stake CVX CRV on Convex Finance. Note that this adds another layer of smart contract risk because you're not just relying on Curve, but you're also relying on Convex Finance smart contract risk. There's also the likelihood that the CVX CRV token won't always exactly track the price of the CRV token. However, I felt that having exposure to a digital asset which could outperform ETH in the next couple of years, and then having a 50% APY on top of that from the staking rewards was worth some of this risk. To execute this trade, I used an order execution strategy to hold a bid on Binance's spot market for the CRV token. Once I had the tokens, I moved them to a digital wallet where I used the Uniswap V2 trading bot to swap out CRV to CVX CRV whenever the price derived from its peg. Once I had the CVX CRV token, I staked it on Convex's platform to gain the yield. While this gave me margin of safety, it also took a lot of time, and it's worth noting that you can directly buy CXV CRV on SushiSwap. One thing I'll never understand is why the release of Uniswap V3 didn't include a more competitive product for stablecoin pools. They've essentially left the door open for Curve to take a greater and greater market share. That's exactly what Curve's doing. Curve's founder recently released a white paper detailing a system for concentrated liquidity pools which move in line with an oracle. This means that you get the capital efficiency of Uniswap V3, but liquidity providers don't have to constantly update their positions in line with price. When this gets released, it's likely to be a very competitive and compelling product, and it could take some of the liquidity away from the automated market makers such as Uniswap and SushiSwap. This sets the stage for one possible future scenario where Curve becomes the backbone of liquidity for DeFi, and everything else like derivative products and options protocols and yield farming strategies are all built on top of it, tapping into those liquidity pools. There's no doubt that the Curve wars are heating up. It's been exciting to see how this battle for voting power and ultimately liquidity is going to evolve. If you want to stay up to date with the latest in digital assets, blockchain development, and emerging DeFi technologies, then subscribe to my channel. Please hit the like button for the YouTube algorithm, and thank you for making it to the end.